entire commodities basket on the editor's radar today. So let's just map the kind of movement, Nikunj, that we've seen in individual commodities in the last 1 month. And then you've got the China factor as well. How does this add up?
We're not realizing it, but 13% higher for crude, 6% higher for silver, and copper prices are up 3%. Copper is called as Dr. Copper because it is an indicator of oil activity. Crude prices going higher, it could be speculative, but ultimately it just tells you that demand somewhere for the fossil fuel is moving higher, and will zinc and aluminum catch up? Bottom line here is that commodity prices are not on a tear, but they're trending up smartly. Commodity prices are trending up smartly, even though you cannot convincingly and decisively say that interest rates globally actually have peaked out. Now you can throw in the China angle, but I want to warn our viewers and say that China had to open up earlier this year when the Chinese economy was unlocking itself after 3 years of strict COVID lockdown, but that has not translated into reality. But in the near term, there is maybe a mood in the market where crude prices, crude derivatives, energy commodity complex and metal commodity complex could be in for a deep swell. There's a difference in a structural recovery and a deep swell. So given the news, the dollar index, China stimulus, things in terms of the setup, how demand in a sense could reorient itself, I will not be surprised if there is a tactical trade in metals especially and some of the industrial denominated commodities.
Okay, there you have it. That's the view coming in on this entire space. Anisha, would be interesting to get in our fundamental guest views as well on this. Sandeep's.
Oh, well, yes.